Welcome back, everybody. Thank you so much for clicking on today's video. So today I'm actually going to be going over a trading strategy that a lot of people should really be taking advantage of, and a trading strategy that actually pulls me in pretty close to about $3,000 a month. But before I start the video, guys, please make sure to leave a like on the video below, subscribe to the channel for more awesome content, join the family, guys. Let's go on our investor journey together. So today I'm going to be going over on how to actually play what we know as called covered calls. So I'm going to scroll down here to my portfolio, and we're actually going to be using NEO stock. I own 200 shares of this. So to be able to sell a covered call, all you need to do is just own 100 shares of a specific stock, and it does have to be able to actually trade options on the stock. So if we click trade here and we go to trade options, we're going to go to the closest expiration here, and we're actually not going to buy anything. We're actually going to be selling, right? So in this specific scenario, we're actually going to be the contract writer. So explain how it actually works in itself. So today we're going to scroll up. We're going to be using the 4750 call here. So, this is a great way to actually make very good passive income. So I'm going to kind of go in depth. So like I said, we're not going to be buying anything. We're actually going to be selling. And since I own 200 shares of NEO, I can actually sell 2 contracts of NEO that expire by the end of the week. So I'm able to collect this $260 in premium. And what happens is it takes your 100 shares of collateral. So you get to collect the premium of the $260, and by the end of the week, when the contract actually expires in itself, you want to buy back the contract at 1 cent. So a lot of people are knowing, so what's the catch here? You could just collect the $260 and that's it. Well, theoretically, yes. And if you're almost certain that the stock price is not going to go above the specific call that you're selling, this is a very good way to pull in a lot of passive income. So, if we take a look here, right now NEO is trading at $45.36. So I almost want to be certain that NEO stock is not going to go above the $47.50 strike price. So what happens if NEO actually goes above that? Well, usually in the middle of the week, if it goes above the stock price, usually since you're using your shares as collateral, someone actually may have the right to actually buy your 100 shares. Someone may be assigned to the actual contract itself, and they have to buy out your 100 shares of NEO. So you almost want to be certain that it's not going to go above that specific stock price. This is a very good strategy to also use if you have a stock that trades very sideways. I know like a lot of banks and AT&T, a lot of people use for covered call specific stocks in themselves, but just easily owning 100 shares of a specific stock is able to net you basically weekly in passive income. So what happens if it goes above $47.50? Well, someone may have the right to buy your shares. Usually this does not happen in the middle of the week. Usually I've never been assigned on a Tuesday or a Wednesday. But on a Friday, if it closes above the price, someone may actually have the right to buy your shares. So that's probably one of the things that you do have to look out for. And the great thing about it is too, this is where it comes important when where you really have to start studying the trading pattern of the stock itself. So if we take a look at the 1 week chart, NEO did have a big run up this week. So, probably playing a covered call on it may not have been a very good idea. But generally speaking, if you're playing with a stock that's basically, you know that it trades sideways, it's a very good way to play passive income. Or even if the stock is not going to go anywhere in a couple of weeks or even a month. So if we skip over here to the April 16th, I'm able to sell a $47 call on NEO for $418. I can sell 2 of these and collect an $836 premium, but I almost have to be certain that NEO stock is not going to go above $47 in 1 month. So this is where it becomes important. But like I said, it's such an easy trading strategy that I feel like a lot of people don't really take advantage of. It's a very good way to make passive income. I've been doing it for a while now, and like I said, this nets me close to $3,000 a month by doing absolutely nothing. I just owning 100 shares of a specific stock. So if you own 500 shares of a specific stock, you can sell 5 contracts on that specific stock, collect the premium, and if you're almost certain that the stock is not going to go above that specific stock price, by the time of expiration, the stock is only going to be worth, or the overall contract in itself is only going to be worth 1 cent. So like I said, so if we go up, you can, if you're a little bit risk adverse, I understand. So we can even go up to the $51 call here, but I can still sell 2 of these and still collect a $106 premium. And like I said, this is just free money essentially at this point. And it's a very good trading strategy that a lot of people don't take advantage of. So, like I said, the most important thing that I want people to understand here is all you have to do is just own 100 shares of a specific stock, and overall being able to understand the stock pattern in itself, because you don't want to lose your shares if you're still bullish on the overall position. Sometimes you can still be bullish, but you almost have to be certain that in that specific week or by the time of expiration, that the stock is not going to have like this massive rally. Sometimes it's very hard to predict. Obviously, companies come out with news all the time that could definitely send the stock in the upward direction, but looking at it from a bigger perspective, most of the time, if you're almost certain that the stock is not going to go anywhere, then this is a very good way to make passive income. So I don't recommend people actually play covered calls when, stocks are very close to earnings. Yes, you may get the inflated premium, but some stocks react very heavily to earnings. So the stock could go really up or it could go really down. If it goes down when you're playing covered calls, that's actually a very good thing because it's getting farther away from your overall expiration. But let's say NIO has great earnings the next time around and I have a covered call on it on the $48 strike price and it goes up to $56, you might have to take a loss on the overall covered call because you have to buy back the contract at a much higher price than what you sold it for. So really analyzing and perfect timing on selling covered calls is super, super important. Making sure that the stock is not going to be headed in the upward direction or doesn't have any big announcements coming up. Obviously, like I said, some of them are hard to predict and I can understand that. But if we look at it, don't sell covered calls the week of earnings for a specific stock, especially if you know that stock has a very consistent track record of playing earnings. But like I said, people do like to play covered calls on stocks that they know that basically they trade sideways. And it's a very good way to make very good passive income, and all it takes is just you owning 100 shares of a specific stock. So if you own 100 shares of a specific stock, you can start selling covered calls. And I'm not promoting any trading strategies. Obviously, everything I say in my videos is not financial advice. It's just my personal opinion, but I feel like people should be taking advantage of other ways to play options in the stock market. There's a lot of ways to make money in the stock market aside from just being like, okay, I think Google or I think NIO is going to go up this week, so I'm going to buy a call, or I think NIO is going to go down this week, I'm going to buy a put. It's just way too hard to predict, and it's very, very risky because everyone who's played options before know how much options or how quick you can actually lose your money playing options, especially if the stock does not go in the direction you want it to. But when it comes to playing covered calls, it's a very good trading strategy to be able to pull in passive income. You know the risk, and especially if you've studied the overall trading pattern of the stock itself and you know that the stock is not going to go above that specific price, it's a very good trading strategy. And like I said, people do this, months out, especially like I said, if it's a stock that doesn't really have much volatility. So if I knew that NIO didn't have much volatility and I knew it wasn't going anywhere over the next couple of months, I could scroll here all the way to June 18th, and I could sell, $50 calls on NIO here. I could sell 2 of them and collect a $1,300, $26 premium. And by the time of that expiration, and I know that NIO stock is still going to be below that overall stock price, you can just end up buying back the contract for 1 cent, or since you times it by 100, you could just buy it back for $1. A lot of good traders do use this strategy, and like I said, there are some risks to it because you do have to put your shares up as collateral, and if the stock does go above that specific stock price, yes, someone may have the right to buy your 100 shares. That's what an overall contract is. It's the right to own 100 shares at a specific stock price. So I do want people to understand that. So it's definitely a trading strategy that does take a little bit of getting used to, but once you get the hang of it, you can make a very decent income from just owning shares of your favorite stocks. With that being said, guys, that's all I really have to say about the video. Let me know down in the comment section below, guys, what you think of this options trading strategy. Do you guys play covered calls on the shares you guys or the stocks you guys own 100 shares of? If you guys have been doing covered calls, how long have you been doing it, and what's been your experience with it? I'm very curious to know. With that being said, guys, thank you. Have a great day.